What's crack-a-lackin', all my beautiful apes? Welcome back to the channel. We are going to be going over everything you guys need to know revolving around AMC in this video. The short interest, the stock O tracker data, the technical analysis. But I do want to focus on something that is happening next week that could be a major catalyst for AMC that nobody is really talking about here on YouTube, on Twitter, and on Reddit. So some of you guys may have no idea what is happening next week. This is something I have talked about extensively on this channel over the past couple of months. So this is something we have had a heads up about, but the fact nobody is talking about it just makes me want to bring it to your guys' attention that much more. So let's not waste any time getting into this video. Wait for it, tap, tickle, touch, or smash the like button for good luck on AMC. If you want to see AMC stock go to the moon, all that good stuff, my OGs know exactly what I mean. It's been a while since I did say that. So let's get straight into this video. And normally we do start off these videos with the technical analysis, which is going to be important, but that is going to be the last thing we are going to talk about in this video. There's much more important things to go over, even though the technicals are looking very good themselves. Let's get into the Ortex data, and then let's get into what is actually happening next week, because I think the two do directly correlate with each other. So first thing you guys got to know is that the exchange reported short interest data did come out today. And if you guys are unaware what settlement date means and release date, the settlement date is the day that this number was actually well, I shouldn't say that. The day the short interest was actually this number. So 18.99% short interest. That was on September 15th. That was the settlement day. The release day was today. And September 15th, tomorrow, will be 10 days ago. And like I said, that's coming in at 18.99%. Ortex is estimating the short interest is about 1% higher at 20.15%. So I do think you're likely to see Ortex revise its estimates to the upside, especially since we have seen this sell-off and shorts obviously did not cover. So I think you're likely to see the actual Ortex estimates go to about 21% or about 20.5%, possibly 22%. It's really hard to tell, but I do think you're going to have a big increase in short interest or estimated short interest from Ortex. So that is definitely a great sign. And this does mark the 6th consecutive exchange reported short interest that we have got going higher. So this is definitely a great sign. From June 30th, every single exchange reported short interest has come in a little bit higher than the last one. So that is huge right there. We have never seen a higher short interest right now than we have ever had. And considering we are really holding up at these higher levels, around $40 is really where we're struggling to see support and resistance at the same time. I do think that is a huge win for all apes out there. And that is something to really give you some clarity on who is winning this battle here. Are the hedge funds institutions winning this, or are we winning this? Obviously, the clear answer is the apes are winning this. We are holding together and keeping our conviction. Now, you're also seeing something that is very interesting as well. It is the share utilization has been going down pretty consecutively over the past 7 days, down about 0.13%, but over the past couple of weeks, down about 8 to 9%. So this means there is more shares available to be lent out. And this is a bit of a caveat. It's a good thing, but a bad thing. In my personal opinion, I think as long as the share utilization stays above 80%, there is ample shares that hedge funds institutions would be able to sell short, meaning the short interest has room to continue to climb. But at the same time, you're not going to see the chance of 4 share recalls to get the short squeeze over as fast as possible unless this share utilization is in between about 98 and 100%. Let me know down below in the comment section, would you like to see more shares available to be lent out, or would you like to see less shares available to be lent out per a higher share utilization and a more likelihood to see a 4 share recall? Let me know your guys' opinion on that topic, because there is two sides to this. Also, the free flow on loan is 22.14%. Like I said, likely to be revised to the upside. The short interest at 20.15%, so almost a 2% exact difference. So that is where I'm getting my conviction that the short interest will continue to climb, probably quite significantly. So that's what you guys need to know from Ortex. Never been in a statistically more bullish situation. But what is happening next week? We're going to go ahead and read this headline for you guys. It says Fed sets big bank capital requirements following stress tests, and the capital requirements for a normal bank is 4%. So if you had, let's keep this simple, if you had $100 million of assets in your bank, you would have to keep 4% in either cash or treasury bonds, something that is very liquid and you could get your hands onto very fast if need be. So 4%, keep that in your guys' mind. It says the Federal Reserve has published capital requirements for the largest banks it supervises that will kick in October 1st. And if you guys have been rocking with me on this channel for a while now, you guys have already seen this. So if you guys already know what this is, feel free to skip past this to the Stocko tracker and the technical analysis. It does say Goldman Sachs will have to comply with the highest capital requirements out of all the 34 banks subject to the Fed's stress test, with a common equity tier 1 requirement of 13.4%. That is a 11% jump from where they just were. It says this year's stress test examined 23 banks, with the remainder of the firms on an every other year test cycle. The capital requirements for those remaining firms will be based on last year's stress test. And just take a look at this. Look at the stress test buffer on these big banks. Goldman Sachs 6.4%, Morgan Stanley 5.7%, HSBC 7.5%, DWS USA 7.2%, another 7.1%, 6.9%, JP Morgan Chase coming in at the lowest at 3.2%, but you also do have this GSIB surcharge 2.5%, 3%, and then JP Morgan Chase 3.5%. So this is where the Fed feels like the bank's cushion needs to be, or I should just say how much capital or a percentage of capital they need for their overall assets and liabilities in case a major market downtrend did happen. And this stress test was based off of if a 55% market crash came. So that's really to put that into perspective, but we're talking about trillions of dollars that have to go back to the banks. And where does the capital go from the banks? The market makers, the hedge funds, institutions, these big time players in the marketplace, they are the ones that really have a lot of the bank's capital on hand. Their margin is coming from the banks. We're not making up the small guys. We make up a tiny fraction of the bank's lending. It is really the guys that are borrowing billions of dollars from the banks that are going to be influenced by this. And what essentially is going to happen are these banks, they're not just going to eat this blow and put more of their capital in their reserves. They're going to raise everybody's capital requirements if they do want to borrow with them. So that is the significance of this. Compare this to really just seeing your margin maintenance levels going up. If you needed, say, 20% in your margin account, they probably need another 5% in their margin account. Take it up to 25%. Who knows if those numbers are accurate or not? That was just throwing out some random numbers. But I hopefully you guys understand what this actually does mean, specifically around AMC, because if you don't have enough capital to meet what the banks want you to meet and put into your accounts, you would need to cover on some positions and release that collateral. That does not mean the short squeeze will happen just because of this. Obviously, I don't think it will happen just because of this, but this is seeing that liquidity crunch coming even more. So after October 1st, if you do see market downtrends in the overall broad market, you're going to see a little bit less capital, or a lot less capital, actually being able to fund some of these accounts, because it literally has to sit in the bank's reserve. So that is very important, something everybody needed to know. Now, as far as the Stocko tracker data, you're not seeing anything significant as far as a potential gamma squeeze until January 21st, 2022. And that's really where you're have a strong likelihood of seeing a big gamma squeeze. Keep in mind, some of these options contracts could start to balloon over time. December 17th could end up being a big options expiration date as well as October 15th, but definitely not to the size or scale of January 21st, 2022. So just keep that in mind as we do continue to go week after week. Now, to wrap up this video, let's talk about the technical analysis. And when we are on the daily candlestick chart, you guys can see the significance of the 100-day and the 50-day moving average. You guys see this 100-day moving average? That's really where we're finding a lot of support back here. Really, when we hit about $29, almost to this 100-day moving average, literally bounce off of that right here about 3 times in all. Now we're coming to this to this moment where the 50-day moving average is at about $40 per share. That is really where we are struggling at, but we are seeing this 100-day moving average actually being a solid support once we do go under that. So every time we hit this 100-day moving average, we do bounce back up right here, $37.65. Now this is even getting higher as time does go on. The 100-day moving average is at $38.73. So I think you're going to see, or continue to see, I should say, a lot of support and a lot of buys going in for AMC. When we do get down to, you know, $39, I think 26 cents was the lowest point that we did hit today, and immediately bounce back up from that over $40. So keep that in mind. As far as going ahead into the future, we are still in this bullish rally, a strong consolidation period over the last couple of days. As long as we stay above $40, this bullish rally is not off the table, and we are not in bearish territory. Yes, it could look a lot worse, but considering where we have come just a couple of weeks ago, August 5th, when we did hit $28.91, now at $40, I will still take this any day of the week. We could just start making our way up for another big leg up to the upside. So that is what you guys need to know. The volume for the day was only 32.2 million, definitely a lot lower than we have seen over the past couple of weeks. So keep all this information in mind. Next week is going to be a very important week, but it could be very volatile, potentially to the upside or the downside, depending on what the overall broad market has in store for us. So with all that being said, guys, tap, tickle, touch, or smash the like button, as well as consider subscribing to the channel. Check out the links linked down below in the description. We have been killing it with the buy and sell alerts. We keep it very inexpensive, so anybody is financially able, if they do want to, grow their knowledge and grow their strategies with trading options, with long-term investing, and with buying cryptos here and there. So definitely check that out. You guys will be notified in real time every time a trade is bought or sold with, like I said, stock, options, or crypto. If you guys do want to support the channel, the two links linked down below for Public as well as for Webull. And if you guys want to support Madison on her journey back to recovery, she is like 100% conscious now. I will get her in a video to really say thank you for the support. You guys have showed out much more than anybody else in her personal life. If you guys do want to support, read more about what happened with her car accident, that is in the GoFundMe, also linked down below in the description. So with all that being said, guys, I hope you enjoy your weekend, and I will see you in the next one.